Hi and welcome to another edition of TraderCast's Daily Market Report. Let's look at Euro Dollar. This is a 4-hourly time frame, so we know that weekly, daily and 4-hourly time frames are all downtrending. The price action is trading below falling multiple moving averages and more importantly below 200 period SMA or EMA. This price action does appear to be creating a double top with the neckline clearly defined here at 107.39, 107.40. Projected extension for that top of the head to the neckline on the loss of that neckline would point to this zone down here, which will reference to this two previous significant lows at 105 followed by 104.60. The immediate resistance on the upside is at 106.55 followed by 107.10 and 107.39, 107.40, and bearish traders would probably be seeing these resistance levels as a logical shorting opportunity with their associated stop loss at any of these levels or slightly above. Confirmed breakout above 107.40 and a green candle closing here in 4-hourly or end of day time frame would negate this bearishness. The immediate downside is supported by the current low at 105.69, 105.70. A loss of that support and a red candle closing here and forming in an hourly or 4-hourly time frame from intraday point of view could potentially indicate that further downside is possible. In that case, downside support would be referencing these two lows, as I've already mentioned, at 105 followed by 104.60. Let's look at something else. This is DAX, German 30, a fairly significant consolidation and a breakout. Well done to all of you who traded this breakout. This does appear to be a J curve. It's almost a parabolic or a vertical move higher. This is the hourly time frame. If we see this in weekly, daily, 4-hourly, even an hourly, this is uptrending market. Obviously, this instrument is supported by QE, by ECB, and it does appear to be quite bullish. However, it will be difficult for us to point the true extension of the current move. It's a bit of a guesswork, but if the current breaks through a current high, which is at 12,400, we could potentially be looking for the retest of further upside resistance areas at 12,415, followed by 12,450, 12450. Only a clear breakthrough above 12,450 could potentially target further upside resistance towards 12,500, and this level is based purely on a round number, nothing else. If the price consolidates at this current area and the pulls back, then we would use the fib retracement from the swing low to the swing high, and then any of these fib retracement levels, 23.6, 38.2, and 50 or 61.8 would offer some logical support. But some consolidation is quite possible. So 12,314 followed by 12,261 followed by 12,218 and more significantly 12,175 would offer some support on the downside. This is Dow Jones or Wall Street. We are reaching some fairly significant resistance. This is end of day time frame. We have falling resistance trend line based on the close of these candles and also falling resistance trend line based on the wicks. We have a high here which is referencing the same level. So multiple things are pointing to this area here at 18,100, 18,095 as a logical upside resistance area. Most of the people who traded this on a bullish side would be looking to take some profits at that zone, and that might cause a bit of a consolidation. Only a clear breakthrough above this 18,100 and a daily candle closing above that level could potentially target further upside resistance towards 18,130, followed by 18,155, followed by 18,200. The other alternative is rejection at the current levels at 18,095 could potentially cause a bit of a consolidation and a pullback, and in that case 18,000 followed by 17,965 followed by 17,886 would offer some support on a downside, and most of the bullish traders would be looking to potentially test long setups on any of these pullbacks and the tests of these supports. A loss of 17,886 would be concerning, and it would negate this bullishness. The last thing that I want to talk to you about is gold. Obviously, this is end of day price, very similar. You have a closing resistance trend line. It used to be a support, but now it's resistance. And then obviously the wick here and wick here and wick here. Obviously resistance trend line at the moment. It used to be a support. So the current price action is looking to test some significant resistances. 1,212 followed by 1,218 followed by 1,226 would offer some logical resistance on the upside. Most of the bearish traders would be looking to sell into this zone with their stop losses being associated at kind of previous higher levels or maybe slightly above. Only a green candle closing in end of day time frame of above 1,226 would negate the bearishness of the current price action, and then that would potentially indicate a pullback in dollar index. If the price gets to these levels and maybe pulls back, then obviously this current high at 1,204 followed by 1,193 followed by 1,185 would offer some logical support on the downside, and also these levels would be seen as a good profit taking levels or partial profit taking levels for anybody who's sitting in a bear camp and looking to short. Also, these levels would be seen as a good potential long opportunities for anybody who's sitting in a bullish camp. Hopefully you've enjoyed it. I'll speak to some of you tomorrow during our live broadcasts, and I wish you all a happy and safe trading for the forthcoming week. Stay safe and talk to you soon.